So when people give me a call, obviously one of my first questions, I know for you too, is just tell me what you're thinking. Tell me what your
Yeah.
plans look
How
like.
can I help you?
How can I help? And oftentimes with first time home buyers, they'll say, I don't even know what to ask. I don't even know where to start. And so I use that as my invitation to say, okay, well, then let me start the conversation. And we start talking about a big conversation about pre-approval and what it takes to buy a home. I know that's how you start your conversations too, because we, obviously talk about it and really talking about the three main areas of, just getting pre-approved and what it takes to buy a home.
Yeah, yeah, and to be honest, I mean, a first-time home buyer conversation is basically the
It's
same
not much different than a
than
fifth-time home
a
buyer.
fifth-time home buyer. Although they may be a little bit more knowledgeable, but I think the conversation is pretty much the same, and it pretty much is structured around three basic areas, and we'll kind of go through those. So the first one being your credit, the second one being your income and debt, and then the third being the funds you need for a down payment and closing cost.
Right. And so let's talk about credit first. And so obviously, credit is an important piece. It's going to tell you it's going to tell us rather, how have you paid on your debts in the past? And for a mortgage company, that tells us how maybe you're going to pay on your debts moving forward, namely your mortgage. Now, I think we've talked about before, obviously, with everybody, that we can help if you have a zero credit score. So it's not like you've got to have a credit score or we can't help.
Yeah, and feel free to watch. We do have videos we've made on how to help if you have no credit score at all.
Yeah. But even still, with somebody that doesn't have a credit score, we're still talking about how have you paid on maybe other things in the past as an indicator of the future.
Yeah, and just reference, most people today, you as I tell people, credit scores are pretty much out there. They're on a credit card statement. They're on a lot of apps, financial apps. Sometimes even your bank, provides you with a credit score. So just for reference, over 700 would be ideal. Over 600 would probably be necessary. If you're under 600, there may be some work you need to do. So that's the credit piece. So the second piece, two parts to it, income and debt. Of course, debt kind of relates to credit. But income, we're going to go through and we're going to talk about, talk to me about your income. I always like start with, what do you do for a living? Because that just kind of gives me some context for your work and perhaps for your income. Most people are paid either on a salary or an hourly rate.
Pretty easy to calculate your income that way.
Obviously, we're looking for full-time work, typically. Ideally. And then there's other types of work. There's things like commission, bonuses, overtime. Those typically you got to have a track record of receiving those for a couple of years. And then your other category would be the self-employed, which is kind of
the old self-employment.
Which is definitely, again, we've made videos on self-employment, but there's that's kind of its own thing where we do have to analyze tax returns. But at some level, we're going to say this is your income in the eyes of an underwriter, in the eyes of the mortgage industry. This is your income. So we're going to establish what that income is.
Yeah, and sometimes we'll call that qualifying income. Mm-hmm. So you may say, hey, I make this much money, but just by, the guidelines and things, this is the only, income we can count. And so it's very important to kind of get to the bottom of what are we dealing with as far as how much money do you have to cover the debts that you have and this proposed mortgage payment that we're talking about.
Yeah.
So the other piece of the debt to income ratio, you guessed it, it's going to be your debts. That goes back to what we talked about with credit. So the debts we're speaking of are just the things that report to the credit bureau. So the big three are going to be car payments, credit card payments, and student loans. There can be other things there, but those are typically the three biggest offenders.
Yeah. So briefly, I'll go over how a debt to income ratio works. Again, there's two components. There's debt, there's income. So, and let's just do some very simple math. So let's say your income is $5,000 a month.
And that would be gross income.
Yeah, so before taxes. And let's say we really, Ideally, I like to use 40%. You can go a little higher, but so 40%.
It's a good starting place at
so
least.
40% of your income would be $2,000. So you have theoretically $2,000 to utilize toward this potential mortgage payment plus all your other debt. So if you're debt free, you probably would qualify for, let's say, a $2,000 payment.
Right.
If you have debt, we have to subtract that off. You have a $500 car payment. Okay, now that knocks you down to a $1,500 mortgage payment. From there, typically we can then say, well, what does a $2,000, $1,500 mortgage payment look like in terms of a purchase price and loan amount?
Yeah, and you can then back into, okay, well, we've got to take property taxes and homeowners insurance and potentially mortgage insurance all into consideration, and whether you're looking at a 30-year or a 15-year. But, if you say, I want my mortgage payment to be $2,000, or that's what you qualify for, we can do the reverse calculation to be able to, let you know approximately what purchase price range that translates to.
Yeah, and let me add, like a lot of times when we're first having a conversation, people will say, well, how much do I qualify for? And of course, we can look at that and what's the maximum I qualify for?
It's a good question.
It's a good question, but I think a more important question I ask, which is, what is the maximum payment that you're comfortable with? So as you're preparing to start the conversation around buying a home, it is extremely helpful if you have your own budget, and of course you have hopefully your rent to go off of what you've been paying. And a lot of times people say, well, I'm paying $1,500 in rent. I'd like to keep it to $1,500. So it's very important, I think, in crafting something, not necessarily around what's the maximum you qualify for, but what do you want your payment to be? And I'll say no more than X, and they'll say, and then you'll say whatever.
Yeah, because I think it's kind of presumptuous of us to say, like, oh, well, you qualify for a $400,000 purchase price or this much a month, when somebody that we talk to they're not interested in spending that much per month.
Yeah.
And so, I'm happy to answer the maximum question, but as you said, the more important question is, what gives you peace of mind?
Yeah.
What makes sense in your budget? What works for you?
Yeah, I think a driving principle for both of us in how we consult with our clients is, what is your vision? What are your goals? Because we want to craft things according to how you want them to be. Now,
Right.
You may want a $400,000 house and $1,000 payment. And then we have to come in with reality and say,
we become the realistic.
We have to say, well, that can't happen. So
Those two things don't go together.
There is a lot of bringing reality to the situation. So let's jump into this third category, which is funds you need for down payment and closing costs. So why don't you cover that?
Yeah. So, I mean, I think I tell people that I talk to, maybe it goes without saying, but I've found throughout the years that it doesn't go without saying that if you're buying a home, you have to have money. Mm-hmm. And so, down payment can be anywhere from, there are some zero down loans with VA and USDA, but more common is going to be somewhere between 3 and 5% on the minimum side. And so having a general idea of where that money is going to come from. Is it your checking and savings? Do you have a family member who has agreed to give you a gift, toward buying a home?
All right, mom and dad, send this to your mom and dad and or grandparents. I always tell people, I say, look,
who do you know?
But I also say, make it known to your family that you're thinking about buying a house, because sometimes people, grandparents and parents, have in the back of their mind they want to help, but they haven't said that to you, and so it's helpful to let people know, hey, I'm thinking about looking for a house, and then they have the opportunity to say, hey, we were planning on gifting you $5,000 or whatever they want to gift you. So make sure people in your family know that you're looking to buy a house.
Yeah. So for the down payment, for the closing costs, we will work with you to say, okay, here's approximately how much you would need. But when we say how much you would need, that can be a combination of a gift. If you're a first-time home buyer, you could look at down payment assistance. Also, once you're in negotiations with the seller, you could ask the seller to pay part of your closing costs. Now, the tricky thing is you can't bank on that money until you're kind of in a negotiation with the seller, but it's always good to keep in the back of your mind and have a conversation with your real estate agent to say, it'd be really helpful for me if the seller could pay part of my closing costs.
Yeah. So, I mean, let's just do a quick recap. So we talked about these three basic areas. We look at your credit, we look at your income and debt, and we look at your down payment. And then from there, we kind of jump to what kind of purchase price and loan amount should you be looking at. So I think this is a good conversation, the hypothetical. I think it's an even better conversation in reality when you start that conversation. And you should never be afraid to have a conversation. The best, we're here to give you advice. We're here to help craft things in a way that creates a win for you.
Right.
And
I think if you give it, if you are interested in seeing if you qualify for a home, or you just want to start the conversation, if you were to give us a call, you would see this conversation in real time, because in all honesty, for years and years and years, this is the conversation we have day in and day out, because it's relevant and it's helpful to everybody we work with, is to look at the full picture and to get a sense for what's important to you so that we can help support you in buying a home that makes sense for you.
Yeah. So two things. Number one, feel free to reach out to either Amy or I. We're here to help, and we're always available to have a conversation. It's free. There's no expectations. We're just here to serve and help and have a consultation with you. Number two, we have made lots of videos around all these topics. A lot of them are shorts, where we'll take just 60 seconds to talk about a debt to income ratio, talk about down payment, talk about these different areas. And so feel free to go through our videos and find ones that would be helpful to you.